Stop what you're doing. DDC is on fire. Big corporate moves are hitting the tape and investors are waking up. This is not small noise. This is a coordinated push. Capital, custody, and a massive Bitcoin buy. The ticker DDC is trending for a reason. If you want a slice of a company rewriting what a modern consumer and digital treasury business can be, listen up. DDC Enterprise Limited started as a consumer-facing business and transformed into a hybrid growth company with a bold digital treasury vision. Today, it runs food and convenience brands while building an institutional-grade Bitcoin treasury. Management blends retail reach with crypto-first finance. The result is a company with two powerful engines, consumer revenue and a focused digital asset strategy. That combination is rare. It gives DDC an edge in both steady cash flow and high growth optionality. DDC has become a name investors watch, and it's easy to see why. Let's walk through the three recent headlines lighting up investor sentiment. First, DDC entered an agreement to acquire 300 Bitcoin in its largest single BTC purchase to date. That announcement signaled commitment. It showed DDC is not just talking about Bitcoin strategy, it is executing at scale. A 300 BTC deal puts meaningful upside on the balance sheet as crypto markets move. Investors cheered because this is institutional-sized positioning, and it changes how the market values the company. Second, DDC announced onboarding with Kraken to enhance trading and custodian capabilities for its Bitcoin treasury. This is huge. Kraken is a leading institutional platform with deep custody, compliance, and trading tools. By integrating Kraken, DDC gains best-in-class execution, custody safeguards, and the operational muscle needed to manage a growing BTC reserve. That operational maturity makes the treasury plan credible and scalable. Third, DDC secured a $124 million equity raise with participation from marquee investors and internal leadership. That capital is fuel. It accelerates the Bitcoin treasury strategy and provides runway for measured, strategic purchases. Big strategic capital rounds bring validation. They signal that outside investors believe in DDC's blueprint, and they put real cash behind it. Together, these three developments create a powerful, positive narrative. Meaningful BTC accumulation, institutional custody, and strong financial backing. DDC's growth story is built on multiple vectors. On the consumer side, brand and distribution momentum drive recurring revenue. On the treasury side, the company is riding two major macro trends: corporate treasury diversification and institutional adoption of Bitcoin. Companies across the globe are exploring Bitcoin as an inflation hedge and strategic asset. DDC is early, but methodical. With Kraken, BitGo, and other partners announced previously, the company has assembled a best-in-class network for custody, trading, and market intelligence. Capital raises like the $124 million round provide the firepower to move quickly when market windows open. Technically and strategically, this is the environment DDC wanted. A well-funded balance sheet can convert dollar capital into Bitcoin when the team judges timing is right. Meanwhile, operational partnerships de-risk execution. That combination attracts institutional interest, trading volume, and media attention, all of which amplify valuation potential. Industry tailwinds are strong. Digital asset adoption continues to grow. Corporate treasury narratives are capturing investor imagination. DDC sits squarely at that intersection. Why are investors excited about DDC? Because the company isn't building in one lane, it's building two. You get a consumer business that generates cash and a deliberate institutional-grade Bitcoin treasury that can act as a performance multiplier. Imagine steady revenue from retail channels combined with upside from a growing BTC reserve. That's a rare risk-reward profile. Institutional capital, strategic partners, and high-profile treasury moves create momentum. Momentum attracts more capital, which widens optionality. If Bitcoin appreciates, the balance sheet benefit compounds. If market cycles present buy opportunities, DDC has shown it will act decisively. The company's leadership has also been consistent in publishing shareholder letters and updates, a transparency that investors value. Put simply, DDC's playbook is bold, repeatable, and exciting for long-term shareholders. That's why the ticker DDC is catching headlines and why long-term potential feels compelling. This is an inflection moment for DDC. Kraken onboarding, a 300 BTC acquisition, and a major $124 million capital raise are not random events. They are the building blocks of a scaled, institutional Bitcoin treasury backed by consumer revenue. If you're watching the market for companies blending real revenue with digital asset upside, DDC deserves a spot on your radar. If you enjoyed this update, hit like, subscribe, and ring the bell. Drop a comment. Do you see DDC as a bridge between retail brands and crypto treasury innovation? I want to hear your take. Share this video with friends who track hot stocks and crypto treasury plays. Stay tuned. We'll keep tracking DDC and bring you the next big headlines as they break. This video is for informational and educational purposes only and should not be considered financial advice. Always do your own research before investing.